This accounting mini lecture video covers the adjusting entries related to accrued revenues. We record accrued revenues when we have performed a service or provided goods to a customer but have not yet received the payment. Because remember, under the accrual basis of accounting, we record the revenue when we've earned it, even if we have not yet received the payment. So let's look at an example. On December 12th, Fast Forward agrees to render consulting services under a 30-day fixed fee contract for $2,700. That's $90 per day. All services are to be completed by January 10th, when the client will pay in full. So let's look at our entry that we would make on December 31st at the end of the month. At this point, we have provided 20 days worth of consulting services. We have not yet been paid for them, but we have completed the services, meaning that we've basically held up our end of the deal and we have earned 20 days worth of revenue. Therefore, we would record an adjusting entry to debit accounts receivable for $1,800 and credit consulting revenue for $1,800. This not only records the revenue, but it also records the asset, which is the receivable that we now have for this customer. Now, let's look at what happens on January the 10th. On January the 10th, Fast Forward completed its obligation under the consulting contract, meaning they earned the remaining 10 days worth of revenue, and the client was also billed and paid $2,700 in cash. This is the entry that we would make. We would debit cash for the full $2,700. We would credit accounts receivable for $1,800. That basically removes that accounts receivable from the books. And the remaining $900 would be credited to consulting revenue to record the revenue for the 10 days of services that we provided in January. Thank you for watching this video on accrued revenues.